Hi guys, welcome to State of Crypto, your one-stop source for all crypto-related news. I am your host Martin, and this is episode 8, Binance Hack and other news. Now remember, I'm not a financial advisor, and everything that we do here is for education and entertainment purposes only. Now, please do your own research before you purchase or invest into any cryptocurrency or any digital asset. If you're catching this stream live, welcome, and if you're catching the replay and have any suggestions, please comment below. Now, if you want to keep up to date with the latest crypto-related news, and make sure you subscribe. You hit that like button and that bell so you're notified when we come live. And if you want to keep on chatting once the stream is done, you can join us on our Discord. The link is in the description. Now, on to the news. Well, I found this article today stating that the big banks are laying off thousands worldwide. The banks include the likes of HSBC, Deutsche Bank, Societe, and Citi. We are reporting. You might be wondering why we're reporting on this article and how is it related to crypto. The difficult conditions that traditional financial institutions are now dealing with have already led to a couple of bank failures, which is a possible sign of upcoming bank crash involving bigger players. Now, if you didn't know the birth of Bitcoin was during the last financial crisis in 2008, and if you remember, back then many banks needed bailouts by governments, and according to this article, banks are in trouble again. Now, alternative assets such as decentralized cryptocurrencies have enjoyed rising popularity among investors in the past months, and naturally the demand for related services has also grown. The article does pose the following question: do you think job cuts at global banks indicate the sector is heading towards a major crisis? If you remember on yesterday's news, we quoted a tweet by Rhythm Trader stating, Bitcoin is now the 11th largest money in the world, and it obtained this with only a 9-page paper created anonymously fueled by a grassroots movement. Millions of people have chosen a bank with no CEO, office, or marketing department, and it should absolutely blow your mind. Now, if you think about it, with MasterCard backing some cards with cryptocurrency as the main component, then you wouldn't really need banks for debit cards, right? Or maybe some credit cards. But then again, we also did an article stating that you could use your cryptocurrency as collateral to get a sort of loan, which is not really a loan, but I mean, you are putting your crypto as collateral. They'll give you money. Nexo will give you money, and then you have to pay it back to free up your crypto. So will banks still be necessary? I mean, most of the cryptocurrencies are decentralized. They're not owned by anyone, right? So would banks will be needed in the future? Maybe, but as more adoption grows towards cryptocurrency, maybe banks will have to change the way they play the field, right? Now, on to the next article. And, one second. I'm going to start this article with a tweet from President Donald Trump. Yesterday he stated, as your president, one would think that I would be thrilled with a very strong dollar. I am not. The Fed's high interest rate level in comparison to other countries is keeping the dollar high, making it more difficult for great manufacturers like Caterpillar, Boeing, John Deere, or car companies and others to compete on a level playing field. With substantial Fed cuts, there is no inflation and no quantitative tightening. The dollar would make it possible for our companies to win against any competition. Now, according to an analyst from Bank of America Merrill Lynch, trade wars and intervention fears continue to dominate the foreign exchange outlook. The global race to the bottom is likely to keep the pressure on the Fed to continue to cut rates, and though our base case remains that foreign exchange intervention is unlikely, we think that the risks have risen. Now, the threat from the U.S. government wading into the currency market by itself to sell dollars in an effort to weaken the currency is one that investors have not been able to shake, despite assurance last month by White House economic advisor Larry Kudlow that direct intervention was off the table. However, if we look at what Trump stated in his tweet yesterday, it seems very likely that intervention's in the table and that they will try to do something to lower the value of the dollar so that it's more competitive, right? Now, for this to happen, the Fed would likely have to lower the rates again, like they did a couple days ago. and it would devalue the dollar and thus lowering your acquisition power worldwide. Now, people don't really like it when the currency is manipulated. That's why they're seeking refuge in this cryptocurrency market. And if the Fed starts to manipulate and lower the value of the dollar, people would likely put more money into cryptocurrency than any other investment, as their money would lose value if they keep it in a dollar-based currency or investments based on dollars, right? Now, great news for our peers in England, in London, in UK. And if you wanted to use the digital platform Robinhood, the trading app, well, and were unable, things are about to change because Robinhood has been approved by the Financial Conduct Authority. That's according to a blog post on August the 7th. And Robinhood offers commission-free cryptocurrency trading in the US, but could also offer cryptocurrency trading without commission in the UK. And that's very interesting. We might see more adoption growing in the UK with this application. Now, if you remember a couple days ago, we covered this article regarding the incident between Chase and their customers when Chase started adding charges to the cryptocurrency purchases, stating they were like cash advances. Well, the judge ruled in favor of the people, and the lawsuit can now move forward. Once the stream ends, I'll place a card up in the corner here somewhere or here somewhere, in case you're interested in seeing that coverage we did. However, the plaintiffs asserted that by categorizing the crypto purchases as cash advances, Chase breached the cardholders' agreement. Now, Chase document explained that cash advances are subject to special rules and defines them as follows. The following transactions will be treated as cash advances: purchasing traveler's checks, foreign currency, money orders, wire transfers, and similar cash-like transactions. Now, plaintiffs argue that the term cash refers to a physical currency, and thus cash-like only refers to goods that represent a legal claim to fiat currency. Chase countered that crypto transactions were cash-like because, like traveler's checks, money orders, foreign currency, and wire transfers, crypto may be used as a form of payment. Now, plaintiffs have to put forward a reasonable interpretation of the contract, and because the court found their view as cash-like was plausible, it allowed the breach of contract claim to go forward. Now, the article states that the case is worth following because in the next round, the court won't just assume the plaintiff's pleadings are true. It will review the evidence not considered in deciding this motion and determine whether crypto is in fact cash-like, and that could set a huge precedent, you know? What impact do you guys think we could see if cryptos are considered cash-like? Please comment below. I mean, I think if cryptos were to be considered cash-like, then it would make regulating them so much easier. The only difference between a cryptocurrency and a fiat currency is that fiat is governed by a central government, and then crypto is basically ungoverned. It's uncentralized. It's decentralized, right? So right now, people are buying crypto like they were buying pesos or wons or yens, and it's even much easier because you can just purchase it, and the fee is minimal when you're in an exchange to purchase that crypto, and then you can transfer it to your wallet and do whatever you want with it, right? We're already at a stage where crypto, you could say, is considered cash-like. However, if they do consider it cash-like, then they could start taxing it more heavily, and they could start doing other things. Banks could consider it, like Chase did, a cash advance, and you could start getting a lot more penalties for buying crypto, right? Now, on to other news. And I really like the following article, and I'll tell you why in a second. Now, this one states that the largest accounting firm in the state of California, Armanino LLP, has just announced that it will now accept payment for its auditing and consulting services by using more than 1,000 different cryptocurrencies. That said their tweet. And what they're doing is genius, and I think it's really smart because it will help raise more cryptocurrency awareness, right? And I think they're being pioneers in the industry by doing this, which will put them at an advantage against their competition. I mean, there's more crypto adoption. The crypto adoption is growing, right? California probably is more advanced than other places. and the fact that such a large firm is accepting crypto as payment, not crypto-like payment, fiat, right? No, you're not paying them in fiat, or they're not going through an intermediary that turns your crypto into fiat. They're taking straight up crypto, and that really sets a big precedent. Now, everyone that is their competition will have to catch up with them. What they're doing, it's really, really interesting right now. Now, Andres Verschelden, the Armanino partner, stated that with more fintech companies, banks, and brokerage exploring ways to mainstream cryptocurrency, it made sense for Armanino to build the infrastructure necessary to accept cryptocurrency payments for what we would expect to be a growing form of payment. It will be interesting to see which of the 1,000 cryptos they include for payment. I mean, the top 10 you could probably bank on that they're going to accept. However, there's thousands of cryptocurrencies and tokens. So let's see which ones they end up taking, right? Now let's look really quick at total market cap. Yesterday we closed at 296.9 billion, which is down 2.11% from the prior day. And total market cap right now is sitting at 297, which is 297 billion, which is 0.04% up from yesterday's closing, which was just a couple of hours ago. Right now, on to Bitcoin dominance. Bitcoin is still dominating. It's increasing for the 9th day in a row. It closed yesterday at 1.1% up from the previous day, from an opening of 70.61 to a closing at 71.37. With Bitcoin right now still dominating at 71.16%, which is 71.10%, which is 0.37% down from the previous day. As we can see in the chart, Bitcoin dominance has just been increasing, even though market cap went up and is right now stagnating a little bit. Bitcoin still bringing in the money, right? They're taking over. Right now, we're gonna start looking at more dominance of other coins as of today, at least until Bitcoin dominance decreases, because it's gonna be really important, right? Within the currencies that we report right now, we're talking that we have around 88 to 90% of the crypto market. So it's really interesting to see how much market they're gaining or losing day to day, because it could really tell us how the coin will or might perform in the near future, right? Maybe we're gonna do it until Bitcoin dominance drops below 65-60%, maybe if it goes down that far. Otherwise, we'll keep on tracking other coins. Now on to Bitcoin, and this article, if you remember, yesterday we covered many articles regarding Bitcoin, and today I only found this one that was worth reporting on. On a tweet by Rhythm Traders, it stated that holding Bitcoin has been profitable for 3,817 days out of a total of 3,869 days, and that is 98.66% of Bitcoin's history. It means it's been profitable most of the time. The only people that have actually lost money with Bitcoin have just been impatient, meaning that they sold during downtrends or exited at the wrong time. Now, this makes Bitcoin profitable, like we said, 98.66% of its existence. And supporters also cited gold for its volatility in the earlier years as a sort of value asset. Now, we rarely scroll through articles in this stream. However, I want to show a table that's on this article, and it's regarding the price of gold after it got taken off the after the dollar was taken off the gold standard. And right, this is here. It started on 72, right? You can see we got US got taken out of the standard on 71. 72, we had an increase of 43.14%. That was the return. Then 66, then 72, then it lost 24, then lost 3, gained 20, 29, 120, then gained 29, then lost 32. Right? You can see there's a lot of volatility. Maybe not as big as Bitcoin is having right now, but there was a lot of volatility, or maybe this is more volatile than Bitcoin. However, we can see that gold used to be like Bitcoin, right? People were seeking refuge in gold, and I still to this day seek refuge in gold. However, now more people are seeking it in digital assets, and one of the reasons is because they're decentralized, right? They can't be controlled by anyone else. How much gold is in the market can still be regulated by governments. if they don't allow people to buy gold, then you cannot have access to it and use it as a store of value. But however, no one can regulate whether or not you hold or can't hold crypto. They can say you cannot hold it, but then there's millions of wallets where you can store it outside of the country and still be able to have access to it, or at least at least a lot of people know someone that lives somewhere else that could lend you a wallet where you can store crypto should the case ever arise. Now, I'm not suggesting that you should do anything illegal. I'm just putting out that there's options for people to still hold digital assets, even though governments could put bans on them. Now, on to Bitcoin dominance. No, sorry, not Bitcoin dominance. Bitcoin chart. Yesterday, we were playing around with this idea of this small triangle developing on the top, and we were playing also with the idea of shifting this downtrend of equidistant channel because it would fit a little bit better on the chart. Now we're gonna go into the 4 hour real quick, and we're gonna see that yeah, this got moved. I was doing it on the 4 hours, so I mean the daily, so it's not as accurate. But there we go, right? Something like this. And if we were to actually shift these points of contact, there we go. There it is. Shift it there. Then we could raise this here. We would get better points of contact at the bottom, having at least two, and having also some on the top. Let me adjust a little bit more. There we go. Having more on the top, and we would see that we're actually not outside of the trend. While we were using it as support, if we wanted to consider that we were outside of the trend, with this adjustment, we would still be within the trend, and having this small triangle pattern develop after that impulse up, it could play out. I mean, we seem to lose a little bit of the negative momentum. However, on the other side, we're still sitting within the regular range where we should not worry too much about. We should still wait for this pattern to develop and see if momentum starts to shift. We might see a little bit more of an upward movement, and we could maybe take a position once we have some kind of breakout confirmation, right? Now on to Ethereum. Sorry, Ethereum still sitting below 8% dominance, sitting at 7.66, which is a little bit up from yesterday's closing. It's at 0.83%. However, as you can see, Ethereum has been losing a lot of dominance lately, and maybe not related to the price per se, but yes, to the amount of market cap they hold. And if we can look at the price of Ethereum right now, also in this is a 4 hour. We're gonna look at the daily, and we can see we're losing a lot of market dominance. Right, Bitcoin has been gobbling up dominance like crazy. We can see that this chart is practically different than this one, right? It's completely opposite, right? Bitcoin has been taking everything, Ethereum going down. Likely, we're gonna look at other currencies also, and we might also see this pattern repeating where everyone's going down, but Bitcoin has been taking up that money from everyone else, right? It's like the big kid in the playground. It's just taking everyone else's money for lunch. Right now on Ripple on the daily, no, sorry, for Ethereum on the daily, we were within this slight uptrend. We've broken it, and playing around with what we have, at least at this point, we could sort of trace this large triangle. Still yet to see what might develop, and at the 4 hours we can see that we've gone down. Momentum has been decreasing. Negative momentum has been decreasing slowly lately. We were a little bit on oversold territory, now heading back towards the safety of the RSI parameter within the medium. And let's see, could we do a down channel? I'm just playing around here with something real quick, see if we can have something here. Not quite a parallel channel, but maybe a wedge within this triangle, which could be bullish. That's what we might be seeing, a slight move up. Also, change of move in momentum could also point us towards a little bit higher prices. Let's see how this plays out. We're gonna shift on to Ripple news. Now, Brad Garlinghouse, the CEO of Ripple, said that the firm is looking into multiple investments and acquisitions following its 30 million partnership with MoneyGram this past June. Now they purchased 10% of stake in MoneyGram, with an option to increase its investment by a further 20 million within 2 years. As we reported previously, MoneyGram began using Ripple X Rapid liquidity product on August 3rd, and now X Rapid is not used by other clients of Ripple like Santander, Standard Chartered, or American Express. And the MoneyGram partnership, Garlinghouse has claimed to represent one of the first use cases of crypto assets in a production scale. Now, Garlinghouse also stated that it is a big deal, and if we were betting now, a year from now, the MoneyGram deal would have more consequential impact on the crypto markets than the Libra white paper. Yet to be seen. Let's see. But also in another interview with Yahoo Finance, Brad Garlinghouse said that they are in a very strong position and that their business is growing strongly. They have a strong balance sheet, and he intends to press their advantage. And that's this article over here. If you remember, yesterday we covered an article regarding Ripple and MoneyGram, where MoneyGram said that they could not disclose which currencies they are buying and the volume of trade activity. However, Brad Garlinghouse in this article has shed some light, at least as to which currencies they might be buying. According to Brad Garlinghouse, MoneyGram integrated Ripple's tech with its US dollar to Mexican peso and US dollar to Philippine peso pairing, and it will ramp up the service heading into 2020. That's very smart. There's a lot of remittances that go from the US to Mexico, so it would probably be one of the largest venues they have, at least from US to Mexico, of remittances. And Filipinos, I'm not sure how many Filipinos in the US or where the money from the Philippines is flowing to, but it's US to Philippines. Unsure of that market, but at least towards Mexico, I know there's a lot of remittances that do go through. Garlinghouse also stated anything we can do to accelerate our growth and gives us more capabilities that serve customer needs is a good place to be. We're probably the largest investor in blockchain and crypto on the planet. We publicly announced we've made about 500 million of investment in the space over the last 18 months. That is great. I like that the fact that Ripple, in the earlier article, we mentioned that Bitcoin was like a bank without a CEO, right? But being able to have someone make these decisions, the decisions that Brad Garlinghouse is making, to make use of a certain cryptocurrency to do something else except being just a store of value, gives much more traction to the projects, right? And having a head does help out a lot, because then you have someone that is determining where this asset's going to go and what it's going to do and how it's going to function. Bitcoin's just floating there. It's not doing anything except being a store of value and a tool for transactions. And this is actually helping solve some problems, right? So going forward, we can probably see Ripple being integrated with banks. You know, if MoneyGram and what they're doing with MoneyGram does work, we might be able to see some banks, including most of XRP's Ripple's products, which include XRP, to make transactions, right? Now we're gonna look real quick at Ripple dominance. Ripple's dominating at 4.33%. It's up a little bit, 1.35%. It's gone up a little bit more than Ethereum, but also if we remember, it's also worth less than Ethereum, and their market cap is almost half of what Ethereum's is. So, but we can see on the graph that it's almost the same as Ethereum, right? It's been losing market cap like crazy. Bitcoin has been taking all that money. Let's see where Ripple's standing in terms of price and graphs. Ripple standing right now at 0.29 cents per XRP, $1 per XRP. Right now, as with the same thing that happened with Ethereum, we can trace this large triangle. We are still in this downtrend we had traced earlier. Haven't broken out yet. However, we're still seeing also this shift in momentum. And we're seeing some divergence because here we had a low, and I think this low might be lower than this low. Let's see. Let's measure here. This one is at 0.0014, and this one's at 0.0013. Yeah, so it's slightly lower. It's barely noticeable, but it is going down, creating some divergence, which might be if Bitcoin doesn't interfere, we might see prices going up. On the RSI, we're still the same, right? I mean, we were also on the oversold territory, now heading back towards the medium of the RSI channel, putting us back to neutral. However, I would hope that touching this bottom part of the resistance of the triangle could propel us to the top part, which would put us at around, maybe depending on where we touch it, but around 0.32 cents again. Let's now go on to Litecoin. And finally, we actually found an article on Litecoin that is worth your time. The last couple of days, we only found articles that were talking about weird predictions that were really hard to back, and also a lot of trading analysis that we were not going to do because it's not the trading analysis that we're doing ourselves. Now, last time we reported that regarding the halving event, we were doubtful as to the future of Litecoin, and we were wondering what might happen with the miners. And this article certainly seems to address some of those issues. Litecoin creator Charlie Lee states that a lot of people are buying in because they expect the price to go up, and that is kind of a self-fulfilling prophecy. They're buying in, and then the price goes up. At the time of the halving, about 63 million coins had been issued, which represent approximately 75% of the total supply, which leaves approximately, or left approximately 21 million Litecoin yet still to be mined. Since the halving, the hash rate has held more or less steady, but you have to remember the halving was only 4 days ago, and the full effects are yet to be seen. Lee also stated that when mining rewards get cut in half, some miners will not be profitable and they will shut off their machine. If a big percentage does that, then blocks will slow down for some time. For Litecoin, it's 3.5 days before the next change. It is possibly like 7 days or slower for slower blocks, and then after that, the difficulty will readjust and everything will be fine. Meaning the rate will continue, the speed rate would continue, right, for the production of blocks. Now, the difficulty has also been has seen very minimal movement outside of expected change, with the next difficulty adjustment estimated to drop by less than 1%. Difficulty, we could say, is directly related to the time to create a block, and in turn the network's hashing power. Now, the Litecoin Summit will be in Vegas on October 28 to 29 at the Cosmopolitan, where the whole Litecoin community will get together to inspire and share ideas and push forward for adoption in major ways. I think they're going to try to come up with actual projects that work and not just leave it in words. Let's see how that plays out for them. Also, regarding Litecoin, Binance has added margin trading for Litecoin. So if you're into margin trading, you can also do it now at Binance. So if you are into it, you can go check it out. Now we're gonna go into Litecoin dominance. Litecoin is dominance is 1.81% of the market. It's very small compared to Ripple. Ripple, let's say, is twice of that, and right now it's up 1.34%. Again, doing exactly what Ethereum and Ripple are showing. Dominance has been going down, and we can see this spike. However, we have to see if Bitcoin is gonna be willing to share the playground with the other coins, right? On to the Litecoin analysis. Now, Litecoin, we had made this downtrend, which would no longer, well, kind of broke it and then went back into it with the next candle. So we could say it was a false breakout. However, it's been sloping down since. We could probably make a small channel, if not a channel, maybe some sort of wedge, maybe. Slightly broadening wedge, but I think channel might better suit this crypto. Let's see, we said from here to here and here. Yeah, I think we could say we're in a down sloping channel within this other down sloping channel. However, as with the other two coins, we are also created this large triangle that we seem to have done the same thing that Ripple did. We went down, touched the lower support of the triangle, which is this line sloping up, and we seem to have bounced off of it. Momentum also slightly decreasing. We can see it here. And we could be making some sort of divergence to propel us to higher prices. However, again, assuming Bitcoin doesn't do anything that will mess around with this. On to Binance news. Now, May, where is it? Binance? Nope, this is the Binance news. Yeah. Now, May Binance hacker has been watching the stolen bitcoins through some mixing service. Plain.io, a Luxembourg cryptocurrency capital flows research team, says that approximately 7,074 of the stolen coins are laundered through a mixing service called ShipMixer. And Klein says that at least 4,836 coins were laundered since June 12th. Klein states that it was pretty straightforward to trace the hacker's subsequent steps, as it is practically impossible to launder a big volume of coins in a relatively short period of time. Thus, we were able to detect the initial pool of hackers' addresses. Um, on other news regarding Binance, this other article also seems to support what we were talking about, the money that's being laundered, etc. And now Binance, U.S. subsidiary, is weighing in whether or not they should list 30 cryptos or up to 30 new cryptos in the Binance U.S. exchange. Now Binance recognize this article does send us to another article in Medium Post, and we're gonna go look at it. But we're gonna look at it for another reason. We're gonna look at it for the rules they're gonna state and the rules of the playing field, basically what they're gonna do to consider the cryptos and the cryptos that they're thinking about listing. Now, Binance recognizes that the ease of issuing blockchain tokens and the perceived lack of regulation could make tokens target for abuse. They come up with this framework that will examine, amongst other things, five areas of for each candidate asset, and the five areas they're gonna cover are whether the trading candidate asset will affect Binance US ability to comply with the applicable legal requirements, whether the candidate's asset core team has clear strategy to solve real problems and make the world a more efficient place, whether the candidate's asset community has a record of reaching compromises and consensus to move the project forward, whether the candidate's asset market supply and demand are reasonably fair and likely to meet Binance US quantitative standards, and finally, whether the candidate's asset technology secure is technology sorry, got stuck. Is technologically secure to transact or do realistic builds. Now, the coins they are considering, there's this picture here, and it says what we're exploring is from August 9th, so it's from today. And, they have a Cardano, Bitcoin, Holo, Mana, Raven, Atom Dash, IOTA, Nano, Tether, US Dollar, XLM, BAT, that you can see them there on the screen. I'm not gonna read them all. On to Binance dominance. Now, Binance price has taken some good jumps yesterday, so we're gonna look at that real quick. Now, Binance dominance, you can see Binance has not dipped as hard as the other cryptos, meaning their dominance has more or less stayed the same. We can see that they're sitting at 1.54, which is approximately 0.97% down from yesterday's closing. Sorry, that's in the 4 hours. Let's look at the daily. Yeah, still 0.1% from yesterday's closing, down still. However, if we look at the daily, as we were looking at the other coins, right? All these dips they've taken, right? Binance seems to take the dips, but not as steep as the other cryptos. This is Litecoin. Now, this would be Ripple, and this is Ethereum, and as we said, Bitcoin going up. So they're been holding their ground pretty good. On the price of Binance, we had this downsloping wedge traced. We broke out of it. Whether I don't think we're gonna fall into it again. However, we could say the pattern's complete. We seem to have touched it as resistance in the support. No, we didn't touch the support, but we also had it traced as a possible triangle. We weren't sure as to how it would play out. However, in the 4-hour, we can see that we can probably this candle still has an hour and 22 minutes to go, but we can see that we're making maybe not this. Maybe another wedge. Or a steeper triangle. Yeah, maybe we can say we're doing a down-sloping wedge right now. Maybe. and we would see how this plays out. Now we're developing negative momentum in the 4 hours. We did go into overbought territory, going back down, breaking out slightly, but now we're pretty close to the 50. We're sitting at actually 50.08 on the RSI. I have one last article I want to cover, and we usually don't do articles after Binance. We just sign off. But I found this other article that's not related to any of the coins that we do here, but it's an interesting article, and it's basically John McAfee said that privacy coins could face a very tough battle in the future with regulatory agencies, and I agree with him. And if you remember, we covered an article on anonymity a couple of days ago, where we touch on regulation for anonymity proposed by the FATF, which they said that we were going to be broken into two types of crypto, like let's say white crypto and then black market crypto. And now we also, that day, we covered an article on the Litecoin Foundation, looking on a way to set up or develop a private transactions on the Litecoin network. Now, we also talked about the on the first article that we covered that day on Monero and Zcash. And these assets, they're recognized for offering privacy features so that users can make transactions while maintaining anonymity. Now, McAfee said that governments control individual lives because they control the money, which is used for everything that we currently use. He stated that currency is the key to all freedom. And if you think about it, whoever controls currency controls freedom. Cryptocurrencies are decentralized and trustless systems. It is distributed with no one in control. And if you think about it, that's why many regulators are struggling with crypto, because there's no one controlling how many are in the market. You come up with a set amount, they reduce as they burn in some cases. In other cases, they might stay as they are as a fixed supply. However, they cannot inflate them or make more. Now, if you think about it, and if you're anonymous and you have currencies that are not governed by anyone, and you have a large amount of that, you could go anywhere and exchange them. As long as they take them where you go, you can exchange them for anything without people knowing that you're spending currency, right? Like, let's say, this is not an example I'm encouraging, but let's say you're in the U.S. and you own a lot of, I don't know, Ethereum, Ripple, Bitcoin, whatever, or Zcash or Monero for this example, because of your privacy. Then you go on to, I don't know, China, and you sell your Monero to anyone on a private transaction. No one will have a record that you bought an X amount of Chinese currency, or if you're in Korea, no one would know that you bought any amount of Korean currency once or whatever. And then you would be really free because no one's tracking you. No one knows that you're there, except that when you bought the ticket, but no one knows how much money you're taking, what you're spending, and maybe that's what real freedom is, right? Anyways, guys, that's all for today. Thank you for watching. Again, if you like what we do, hit that like button, subscribe, and hit that bell so you're notified when we come live. And if you believe that the content that we produce is of value, or you believe it might be interesting to people that don't know about cryptocurrencies or crypto markets, let them know we're here. We'll be glad to chat and discuss with them regarding any cryptocurrency, right? Also, if you want us to cover other cryptos that are not the top 5, we just covered the top 5. Like we said, they are 88 to 90% of the market cap. So if you want us to cover any other cryptos, do let us know and we'll definitely look into them, all right? That's all. Thank you for watching, guys. If anyone has any questions, you can put them on the chat. Otherwise, we're going to sign off shortly. All right, no questions. So we're going to go off the air, guys. Thank you for watching. That's all.